500, up 12%, followed by IRB Infra, that's up 9%. Jupiter Wagons, we've talked about how railway has been quite the Modi stock or the Modi theme over the last couple of months, up about 3%. Adani Ports, Adani Green, Adani Total. So the top 6 gainers, of the top 6 gainers, 5 of them come in from the broader market Adani names. PFC, Bank of Baroda, Titagarh, HAL, HDFC Asset Management is up 7%. IRFC, IRCTC is trading higher. Capital market names like Angel One are up 5.5%, 6% each. Real estate companies like Prestige Estate is also trading with a gain of 5.5%, 6%. Bharat Electronics, Suzlon Energy, BHEL, IOC, OMCs, BPCL, HPCL, all are seeing a sharp up move in today's trade. So real estate also looks pretty solid in trade. So do banks, so do capital market players. Motilal Oswal is up 5%. Yeah, the list is just extensive. I can keep talking.
This is our conversation this morning. What stocks to give?
Most certainly. But you know, one group that stands out just before we get to our guests, the Adani Group stocks.
Zomato is actually trading flat. That's definitely worth a mention.
Okay.
It's lower.
Okay. Yeah, but the Adani Group is now at pre-Hindenburg levels. If that is any indication of what the rally has been like, fair and square, Friday and Monday, today, I think that group has done really well. Look at those stocks flying around. Let's get in Ravi Dharamshi, founder and CIO of ValueQuest Investment Advisors on the phone line. Ravi, really appreciate you taking this time out and joining us this morning, but exciting start to the day. How do you think about what's next? Short term, medium term, long term?
Hi, Niraj. Good morning. Good morning to our viewers. No, thanks for having me. No, I think, see, the biggest takeaway for investors is that, you know, India has, since independence, always succumbed to fits and starts in terms of reforms, in terms of moving ahead and progressing. So this time around, a particular government has gotten 3 terms and is probably going to get a 3rd term in a row. So that, I think, paves the way for doing some real long-term tough reforms and really thinking from a 50-year point of view, 100-year point of view, and not in terms of next 5 years of winning the next election.
Investor, or let's say if you had cash, would you be deploying that starting immediately, or are you waiting for or biding your time for some dips, if you will?
Luckily for me, we have been kind of deploying in the market even prior to this. So, but yeah, now it gets a little tougher because you'll have to start chasing even more. But if the funds do come, I am definitely not averse to deploying. Yes, you'll have to look, work hard and find spots where the relative value is there, or where the entire next 2-3 years of future is not yet baked into the numbers. So you'll have to work tough, harder in finding those opportunities, but I would deploy.
Ravi, I like that line. Luckily for me. I'm wondering who the unlucky ones are today.
No, more importantly, fortune favors the prepared mind, right?
Yeah.
He's modest, but he's been brave enough to deploy when a lot of people were sitting on cash.
Yeah, so no, honestly, I mean, I think I won't say I took a call or I'm brave or anything. I think rather than apply my brains and fringe portfolio making on a particular event, we have to think long term. And from that perspective, I think we were very clear that Indian macros have never been so good. Micros are also following up. Why wait for an event?
Yeah, so that was the big bet on India, irrelevant of what happens in these elections. And I think the big trigger over here for the kind of gap up that you're seeing is that any uncertainty which was being seen in the last week has been wiped out. Look at the India VIX, 18% down. India VIX is at 20.13. Nirav Sheth joining in, CEO Institutional Equities at Emkay Global Financial Services. Nirav, great to have you on this very, very exciting morning. I mean, the screen's looking spectacular. I think one for the records, really. And, you know, you're seeing that big push there. The question is, how do you move ahead from here? The internal debate has been that, okay, you will see some profit booking. At what point do you see it? And what do you do at this level?
You know, thanks for having me on the show. The question that you asked me is something that, you know, that was true for last week, a year back, 2014, maybe even 2004, right? So even when you had a complete change in the government and the markets kept down 20%, that was the time to go and buy, and you had one of the biggest bull markets. So to me, the only alternative is that if you are not in the Indian equity asset class, what are the alternatives? And I believe that you don't have a great alternative anywhere in the world. I've been saying this for some time. You've got the right stacks set up for India to end up being a bubble market in the next 3 or 4 years.
No, so Nirav, just to that, I take your point. Thoda evergreen type question tha mera. Give me a chance to revise it. Yes, that question has been always there in the Indian markets. What you do at 2004, also that question was there last week. Also the question was there specifically. Let me come to specific spaces. If I were to look at the PSU stocks, defense stocks, and the valuations they have run up at, you know, an investor who is looking at their portfolio this morning and feeling very happy also has that question, ki aaj main kya karu? After this kind of run up, can you sustain above 23,000? We know now, as in the market has completely priced in what we are likely to see on June 4th as well.
Right. So I'm not even looking at what's going to happen tomorrow. Maybe the numbers are in line with what the exit polls are predicting. Maybe they could be higher or lower. Frankly, anything once you got a full majority, I think I'm agnostic in terms of how the current political dispensation is going to look at policy reforms going forward. To me, the key point is that you started on 6% growth rate, you have hit an 8% growth rate. Your core inflation today is lower than what is there in the US. I don't think that we are getting a sense of where we are heading as a country, right? Uh, we had a big problem with current account deficit. You are at a stage where in next 1 or 2 years, you will sort of get into a current account neutrality situation, right? So you need to look at equity market in context of where my macroeconomic variables are moving, right? So I suspect that you are not going to get reasonably good returns in the equity market, but even in the bond markets, because your interest rates are going to head down over a period of time. And that finally determines the valuation. Now, coming back to, obviously there are pockets of expensive valuations like defense and maybe some other stocks. So what do you do? If you think that the story is great, if you think the valuations are great, then you try and play with the size of the bet, right? So I can be neutralish or I can be underweight, but you still need to be a part of that. You need to be invested in these stocks because which is where there is longevity of the growth. Uh, Let me give an example. Let's try and put this in context of why this is happening, right? From 2010 to almost about 2020, you had markets rewarding a particular set of investments, which was largely consumer-driven, high ROC, consumer stocks, stuff like that. And when the market incentivizes that, you got investments that will follow that. So you got Jindal's setting up a paint plant, you got Birla's setting up a paint plant. Who set up infrastructure in the country, right? Everywhere in the world, we are short power today. Someone has to set up utilities. And therefore, what you are seeing right now in terms of utilities is that the market has to have an adequate incentive structure for promoters to go and say that I am going to invest in these new sets. That is what is happening. So this is capitalism. I am not at all surprised.
Ravi, hi. It's also Samina joining in. Big global brokerages from the Jefferies to the Cantor Fitzgerald have recently touted Adani Group stocks as a proxy to play the India growth story. And the sharp rally on some of the stocks is a reflection of that. Do you feel that there is still significant investor wealth to be created amongst these stocks, especially in the backdrop that fundamentals of these companies have also improved significantly?
No, so clearly if the exit polls are right and if this government is coming back, I think a lot of the performing sectors will perform even more. And that includes infrastructure, defense, railway, all those kind of stocks are going to continue to perform. Having said that, the margin of safety over there has definitely reduced dramatically, but I don't see a reason for those stocks to come down in any near-term thing. And I think the growth will get stronger. I do expect some kind of a change in the way the market is performing at some point of time, because I think the central government is probably going to slow down on its own capex, and private sector and state governments are expected to pick up the gauntlet over there. So the type of companies that do well might change. It will not be based on what the central government is doing, but more on the private capex cycle.
I'd like your thoughts on this one too, because you can't help but see the kind of rally some of these counters have seen. Fundamentals have improved.
Samina, I think there's a small audio thing, maybe your mic has fallen, but Nirav, the same question to you really, and you were just starting to answer that. Could you give your thoughts?
Yeah, so my view is that, the execution that you've seen in Adani Group has been mind-boggling. I mean, I'm surprised, and I don't think that, given the fact that there are always valuation concerns around some of the stocks, I don't think investors have looked at it very deeply. And please don't get me wrong, I'm not even advocating. We've not covered, we don't have the stocks under coverage. But if you look at what they have done, for example, in the renewables, right? They've got close to about 2 lakh acres of the most appropriate land bank for solar. They are backward integrated in not only in cells and modules, but they have also started, it's already commercially operating. We are talking about Equinor. They want to get into polysilicon. I don't know how many guys are aware that they already set up a 1 lakh ton of copper refinery, right? And just look at the scale and scope of the work that is happening in the airports. Their execution is at a different level altogether, right? So there is a lot of optionalities in that group. And I think that only one group which really invested in India's infrastructure in the last 5 years has been Adani Group. And the world opens up because that is where the entire thrust is going to be. Where is the capacity to do large scale construction? I'm just giving an example. We've seen the PM going on record saying that you want to pitch very, very strongly for Olympics in 2034. Now that is going to be massive investments, right? As a country, do we have the capacity? Right? So there are some groups who have invested in setting up their capacities and at a world-class level. So I'm keeping the valuations aside. I'm just talking about the fact that some groups took a different route in terms of where you want to invest for the next 20-25 years. A lot of the groups went after the consumer-facing businesses. What is going to play out over the next 10 years is going to be entirely different.
Okay. Ravi, understand we have to let you go, but one final question really. Where is it that you now put incremental money at work? Is it, would you bet at some point of time consumption will make a comeback? Would you bet on policy push continuation and therefore some of the beneficiaries which have gained quite a bit but are expensive might still become better? How do you now allocate incremental capital, Ravi?
My incremental money obviously will try and look for areas that have not performed, and especially I think large private banks or consumption-related areas. These are the ones. Having said that, in the next few months, can the momentum continue in the stocks that are doing well? Absolutely, they can. But if my prism is 3 to 5 years, and from that 3 to 5 years prism, I find investing in some of the performing companies a little bit of risky. Am I still holding on to those companies? Yes, I am, but I am not putting any more incremental money on them.
Okay, Ravi, understand we have to let you go. We'll let you go on that note. Thank you so much for taking the time out and being with us today. Really appreciate your time.
I have one question with Nirav. Nirav, I was listening to what you were saying about how private sector now comes to the forefront, and really the trick over the next few sessions, and I would say not just next few sessions, next few weeks in this market is going to be to identify the new pocket of growth. If you're looking at a situation where you have policy continuity, the same kind of push to the private sector, etc., where is that growth? Where do you see the clues there? So, for example, we were having a conversation this morning that climate change and tackling climate change will become a huge theme for any government, including Indian government, in the next 5 years. You're going to push down on Make in India, PLI, and the participation of the private sector. Do you think it's very important now to identify those new pockets, and what have you been seeing? Nirav, can you hear me?
Yeah, I can hear you right now. I missed the last part of the question.
Yeah, so the last part of the question was essentially that what are those themes in your view? Where are those stocks? What are those themes? Because right now someone has to spot the new ideas. The PSEs, defense, rail are already there, priced in. If private sector is going to take the forefront, then where are those new ideas coming from? Nirav,
right, the markets, right? But I seen a major reform.
can you start that? Yeah, you kind of froze there for a second. Can you start that again, please?
Not.
All right, we have a bit of a glitchy line over there, but I'm really interested in seeing that story, because that's how you will need to spot the winner, right? Because the themes that have been going on for the last, I would say, year and a half, are there very much. They will continue. Public sector companies will become stronger, their balance sheets healthier, your infra, policy push, road, railways, defense, etc. But what's next? What's new? If they have said time and again that AI, EVs, climate change, all of these areas are going to become big themes, becoming Atmanirbhar in semiconductors, APIs. What are the stocks that you then now look at as the next run?
I mean, even if you don't go that far, consumption, rural consumption, that could be one space that may start seeing some traction. Of course, those numbers haven't looked very promising in terms of GDP data. But if you see the government doing a little bit of a push to spruce up consumption, then I think rural could be one more theme that the markets may start constructively looking at. But all in all, what's interesting, and I think this is what we talked about, guys, the Nifty saw a start at 23,340. We're 200 points off the day's high point. So profit taking has kicked in as expected. Trade will stabilize through about from now till about 11:30, 12, and you may see a return of euphoria in the second half of the session. But there is a little bit of sanity that's now returning. The euphoria is settling down. PSU banks are the star trade. So is real estate. So is defense. Everything is moving up. But I think the markets may now give traders an opportunity to come back in and buy for the second half of trade, and maybe potentially even tomorrow. So watch out for stocks. There are lots of stocks that are off the day's high points. If you're a short-term trader,
what you call sanity, we're still 600 points up. So
we are, and I mean, stocks like Adani Enterprise are at the record high. So if you didn't enter these counters at the get-go, but beyond Adani Group stocks, there are a whole host of other names. The Nifty itself was at 23,340. That was an intraday high. We're slightly lower now, so we've gone up about 150, 180 points from there. Actually, do we have any of our technical guests with us?
No, but we have Nirav Sheth, so I think we should ask him.
What do you think? I know this market should and is best divided between a tactical trader and an investor. We know what investors should be doing, right? Staggered investments, be disciplined. That's when you create significant wealth. I don't know whether you're comfortable answering this for me, but we did get a gap up, a massive gap up in the first few minutes. We made that high of 23,340. We're 200 points off that now. Do you feel that now could once again be an opportunity for bulls to maybe initiate fresh longs, maybe covered option strategies between now and today? Or do you feel like it's buy the euphoria, buy the exit poll and sell the news, and the markets may go back to business tomorrow?
So, it's usually difficult to take short-term calls, but I am of the view that the markets are gradually going to rise pre-budget, anticipating what the government is going to do. They'll probably stall over there. I'm then probably looking at a longish spell of time correction more than anything else. Till the time that market is ready to try and price in a rate cut, and then, when you start looking at you get more clarity about FY26 earnings and FY27 earnings. So budget, I think, will be crucial in terms of the government trying to lay the direction for the next 5 years and 10 years. And I suspect that you are likely to have the next level of reforms on the indirect taxes, right? And without trying to get away from the fiscal consolidation that are going to move forward. And that could be a big, big trigger in terms of how the markets are going to look at.
Nirav, I think we had a patchy line, and I don't know if you could hear my question. Let me come back to it. I was talking to you about what new themes that we can spot of what is expected in term 3. I mean, what is already run up, what is already clear in terms of policy push is there. So your rail, defense, improving balance sheets of PSUs, etc. That theme is there. What are the new areas that you are looking at right now?
So I think if you just read what Mr. PM Modi has written in one of the editorials today, size, scale, scope, and standards, right? So what you want to do it at a big, much, much bigger scale. I think that we've lagged in terms of electrification. And India spends about $100 billion in oil imports. You need to get that supply chain right. So I think that'll be a massive, massive focus in terms of how do you want to set up that ecosystem for electrification in the country. You mentioned about climate change. I call it energy transition. Serious work has to happen in the green hydrogen and then all the way into solar and wind turbine manufacturing, right up to the mining stage. And like I just referred to, I think the critical thing is that you also want to uplift the entire manufacturing in the country. And one way to
Nirav, on a portfolio recommendation level at this stage, where we've seen whether
that is to try and reduce the median GST neutral rate.
His audio.
I don't know whether I'm being audible or whether we are.
we can hear you, Nirav.
Sure.
Nirav, yeah, go on. Please go on.
Yeah, so I was just saying that to me, a critical reform could be whether you can reduce the revenue neutral rate for GST, which is let's say about 16% to about 12%. That is disinflationary. That does exactly the same thing that happened to a direct tax. You've got lower.
Glitchy line with Nirav. We need to fix that so that we can hear all his answers correctly. We'll try and get that in place. Now, while we do that, just wanted to go through this very interesting piece my colleague Mahima sent me actually. She's put together top 5 stock picks if you see results tomorrow like what the exit polls are indicating, and that's what the market is celebrating right now, still about 600 points up, 582 points up on the Nifty. So now a slew of brokerages have come out with their top picks. So number 1 of those picks is Adani Ports, which has been supported by, so this is a call by Citi and Motilal Oswal because it's projected to benefit significantly from infrastructure and logistics development. Number 2 is Coal India, that's on Motilal Oswal, Phillip Capital and Jefferies list, and they all put out their reports on pre-election. Coal India is anticipated to perform well with continued focus on energy and industrial growth. Number 3 is ICICI Bank. Now, I found that interesting. Motilal Oswal, Phillip Capital have put this out on their list. ICICI Bank is viewed as a strong player in the financial sector, expected to benefit from political stability and sustained economic growth. So the private banking space and all, but ICICI Bank is one of the favorites. SBI is the other one. Motilal Oswal and Phillip Capital have both put it on their list. They say SBI is looking like it will reinforce its dominant position in the banking sector. And then there's Larsen & Toubro, endorsed by Motilal Oswal and Citi. L&T stands out in the industrial and infra sectors as it is expected to thrive with ongoing and new projects. So there are many actually. And in fact, CLS had a list of 54. Yeah. But the top 5 that we picked, which have brokerages going for it, and all of them actually doing very well today.
PSUs are trading very, very firm. Tamanna, even OMCs this morning, I mean, look at HPCL, it's up 8%. BPCL, IOC also doing extremely well. 96% of the Nifty 500 stocks are trading deeply in positive territory with a whole barrage of broader market names that are actually doing quite well. 97 of the 100 mid-cap stock gainers are coming in from the PSU pack. So that is the kind of breadth, the euphoria that the markets are seeing. Of course, what we saw on Friday was only the Adani Group names do well. But beyond that, the rest of the market, in fact, those Modi stocks, like they've been called, an HAL, a BDL, a BEL did take a little bit of a break, maybe potentially giving investors and traders an opportunity to jump back into these stocks. Bharat Dynamics, which has been the star of the last couple of months, is probably lagging slightly behind the gain of only about 3%. But is that an opportunity to buy? And that's what we should try and understand from our trading and fundamental analysts. BEL is up 6.5%, 7%. You've got, let's actually pull a Vodafone idea. I want to pick this one up because it's been, while it may not be an election theme, the stock has been seeing enormous amount of buying interest over the last couple of weeks on back of its Theo brokerage upgrades. Another 4% being added, getting closer to 16 rupees on Vodafone.
Actually, Vodafone is kind of an election theme in the sense...
If there is the government's policy...
In the sense you have, the government is now a serious stakeholder in Vodafone. They have a big bill due in FY26 and it's up to the government to make it easier, maybe convert some to equity. The direction so far in term 2 has been to allow Vodafone to exist and
survive. Yeah,
so in that sense, yes, I would say. Nirav is back with us. Nirav, I'm going to do a quick audio check with you. Can you hear me? To hedge today?
I think, I always believe that you should look at equity from a 3-4 year perspective. For whatever it is worth, I don't think India has ever had a negative rolling 3-year Nifty return, ever, right? And this is through successive governments and through multiple challenges, through pandemic and GFC crisis. So that's the inherent strength of the Indian economy. You do nothing, India grows at 5%. If you're a great leader, you can grow at about 8 or 9%, right? So, I am very, very bullish on the Indian macroeconomic situation. A lot of this is also being in the right place at the right time, right? In terms of the geopolitics, in terms of how it is turned out. You don't have to necessarily figure out what you're going to make the next 1 month, 6 months, whether you want to buy today, tomorrow. No one has a right answer, right? Should equity be a significant portion of your asset class in terms of investment? The answer is unequivocally yes. It is difficult to try and create alpha. So for normal investors, mutual fund is the way forward. Outside that, to a second question in terms of what are the sectors, infrastructure and, I believe that this is a big tail. So, you got EPC companies, you got pumps, you got engineering services. I'm bullish on real estate. I'm bullish on banks. And you got new sectors coming in, right? So now got people investing in data centers and stuff like that. So, but like I said, I'm not making a case for any one particular company. We do need to keep in mind that the investments, the investment profile is changing, right? It is no longer only copper and aluminum and cement. A lot of the investment is happening in digital infrastructure, which is very, very intensive. I talked about energy transition. I talked about electrification, stuff like that. So, some 300, 400 companies have got listed in the last 4-5 years. So, India has a big, big tail of, new companies, niche.
Nirav, I think we're again having a little bit of a patchy audio with Nirav Sheth, but he was talking about how there are newer sectors now that markets can, of course, or participants in the markets can, of course, go out and trade and make money in. Remember, you have newer themes that are emerging, but most people believe that the old economy could really, truly be a good play even today if you want to be an investor in equity markets. The Nifty is looking very sweetly placed. Of course, it looks like it is getting closer, or rather averaging out at 23,100, which is potentially where fresh buying may come in. Well off the day's high point on the index. And you can see the chart, right? You saw that big bump up in the first few minutes, and then we've sort of stabilized as we see it. A quick check on the VIX. The VIX was down. Oh, and Bank Nifty has hit 50,000. I think that is also, that's the India VIX, down about 21% now. But the morning star is the VIX along with, there you go, 50,230 is what we have on Bank Nifty. The biggest contributor there has to come in from PSU stocks. Adani stocks continue to be drawing attention of traders and investors alike. So you've got stocks